This video is created by Jagrat Creations. It is on depreciation accounts, hence useful to the students who are reading for 11 Commerce or say Class 11, CA Foundation, ICWAI Foundation, CS Foundation, CA-C.P.T. I want to solve one sum on depreciation accounting. Just observe the sum on the screen. I'll read the sum for you. I'll prepare the working note and I'll solve the sum. Mangla Mills purchased one machine for 38,000 on 1/1/2013 and paid wages 2,000 to erect the same. Another machine of 30,000 was purchased on 1/7/2014. Third machine was purchased on 1/10/2015 for ₹60,000. First machine was sold at 20% loss on book value on 31st of December 2015. Prepare machinery account for 3 years ending on 31st of March 2015. Depreciation is to be provided at 10% on straight line method. So first point that you should remember, 3 years ending on 31st of December 2015. So accounting year ends on 31st of December. First machine is purchased on 1/1/2013. 31st December 2015, 3 years ending on. So 2013, 2014, 2015. These are the 3 years for which we are required to go for accounting. First machine purchased on 1/1/2013. Second machine purchased on 1/7/2014. Third machine is purchased on 1/10/2015. These are the 3 different dates on which machines are purchased. First machine purchased on 1/1/2013, used up to 31st of December 2015. So first machine has been used for 3 years. Second machine purchased on 1/7/2014. So in the mid of the 2014, it has been used in 2014 for 6 months and it has been used for 1 year in 2015. Third machine purchased on 1/10/2015. So 1/10/2015. So 3 months, October, November and December, 3 months for which the third machine is used up to 31st of December 2015. The first machine is sold on 31st of December 2015. So first machine has been disposed of after using it for 3 years. This is what you should understand on the basis of reading this sum. Now I'll prepare working note here before you. I'll also prepare machinery account. Depreciation is to be provided at 10% by straight line method. So every year the depreciation amount is same. That's an important point. Now here I'm going to prepare working notes. This is for machine 1, this is for machine 2, this is for machine 3. Here I'm going to write down the total. At the top of the working note, I will write the information about the machine purchased and its annual depreciation. And in the second part, I'll go for calculation on the basis of timeline. Now first transaction. Machine purchased 38,000, wages paid 2,000. So total cost of machinery considered 40,000. So here in this working note, I write down 38,000 plus 2,000. This is the cost of machinery. Straight line method. So annual depreciation is equal to, at the rate of 10%, 4,000 is the annual depreciation. Now this is the information about the first machine that I have recorded. Now the first machine purchased on 1/1/2013. So first of all the machinery is purchased for 40,000. Check issued 38,000. 2,000 cash paid. So I am supposed to write down the machinery account for 3 years. So here I prepare machinery account. On the debit side I will write the purchase of machinery. So machinery account debit 40,000. To bank account credit 38,000. To cash account credit 2,000. This is the journal entry for purchase of machinery. Machinery account is debited because ownership is acquired. Debit the ownership it comes in. It's a rule of real account. Debit what comes in. So machinery account debit to bank account. Check issued for 38,000. To cash account, wages paid for purchase of machinery. So machinery account is debited with 40,000. Now this machine is being used for whole year. Next machine is purchased on 1/7/2014. So I am required to write down the depreciation for the first year at the rate of 10% on 40,000, 4,000, that is already there. This 4,000 is the depreciation that I write for 12 months. This is the total depreciation. What is the journal entry for depreciation? Depreciation account debit to machinery account credit. Depreciation being decline in the value of machinery being loss expense. So it should be debited. So expenses and losses are debited. So depreciation account debit to machinery account credit. So here I write on the credit side of machinery account 4,000 depreciation. Depreciation account debit to machinery account credit. Now after writing down the value of 4,000, the value left on 1/1/2014 is 36,000. Now this depreciation is debited, depreciation account debit to machinery account credit. Depreciation is transferred to profit and loss account at the end of the year. So I just save the journal entry for transferring depreciation, profit and loss account debit to depreciation account credit. After recording depreciation in this machinery account, I would like to find out the closing balance of machinery account. So 40,000 minus 4,000, 36,000 is the closing balance. This is how calculation confirms. This closing balance become opening balance in the next year. So next year when we started using the machinery, its value was 36,000 because decline in value of machinery has occurred in the previous year because of annual usage. So opening balance is 36,000. Now 1/1/2014, second year has started. In the second year, another machine is purchased on 1/7/2014. So here I write the general information for machinery purchased, 30,000. Its annual depreciation at the rate of 10% is how much? 3,000. Now this machine is purchased on 1/7/2014. So it is purchased on 1st of July 2014. This machine, new machine, is being used in 2014 only for 6 months, starting from July, August, September, October, November and December. So 6 months depreciation will be calculated in 2014. The annual depreciation is 3,000. So 12 months depreciation is 3,000. What is the depreciation for 6 months? 6 months depreciation will be 1,500. Now I write the purchase in timeline. I write the purchase of machinery 30,000. After recording this purchase, I am required to debit machinery account for 30,000. So machinery account debit 30,000 to bank account credit 30,000. This is the entry for purchase of machinery. Now by 31st of December 2014, I am required to provide depreciation on 36,000 for 12 months. And here the depreciation is to be provided for 6 months because the purchase has taken place on 1st of July 2014. So depreciation is calculated at the rate of 10% for 12 months. What is 12 months depreciation? 4,000 annual depreciation. What is 6 months depreciation on the basis of this 3,000? 1,500 is the depreciation for 6 months for this second purchase of machinery. So here 12 months depreciation, that is 4,000. 6 months depreciation, half of 3,000, 1,500. Total depreciation 5,500. 4,000 plus 1,500, 5,500. Now on the basis of this 5,500, I am required to write the entry for depreciation. Depreciation account debit to machinery account credit. So this is the closing balance, means 36,000 minus 4,000, 32,000 is the balance to be carried forward to the next year. Here the balance to be carried forward to the next year is 28,500 and total depreciation 5,500. What is the entry for depreciation? Depreciation account debit to machinery account credit, being depreciation credited to machinery account. This depreciation is transferred to profit and loss account at the end of the year. So you know the journal entry profit and loss account debit to depreciation account credit 5,500. But here the machinery account is credited with 5,500. After recording this thing, I should find the closing balance. 66,000 minus 5,500. You will get the closing balance. So closing balance will be 60,500. So 66,000 minus 5,500, 60,500. This is the balance of two machines. So total of these two will be equal to 60,500. This is the closing balance. This closing balance will become opening balance in the third year. So this 60,500 becomes the opening balance in the third year. So opening balance 60,500. Now in the third year 2015, on 1/10/2015 machine purchase for 60,000. Here I write the general information, 60,000, annual depreciation thereon is 6,000. Now machine is purchased on 1/10/2015, 1st of October. So October, November and December, 3 months depreciation will be calculated for the year 2015 because machine has been used only for 3 months in 2015. So annual depreciation, 12 months depreciation is 6,000. What is the depreciation for 3 months? 3 months is a 1/4 portion of the annual 12 months. So 1/4 of 6,000, 1/4 of 6,000, 1,500 is the depreciation on this third machine for the year 2015. Now let me write down first of all purchases. Machinery account debit 60,000 to bank account credit 60,000. This is the purchases are recorded. Now by 31st of December 2015, I am required to provide for depreciation. On first machine, depreciation will be provided for the whole year. Why whole year? Because the date of sale is 31st of December 2015. So for the first machine that is being sold, you are required to provide for depreciation till the date of sale of machinery. Here the date of sale of machinery is 31st of December 2015. So for first machine, depreciation will be provided for 12 months. We will find out the book value. We will work out the loss or profit, whatever it may be on sale of machine. For second machine, the depreciation will be provided for 12 months. It is being used for the whole year. And for the third machine, depreciation will be provided only for 3 months. That is from 1st of October to 31st of December. Now, 12 months depreciation, 12 months and 3 months depreciation. Annual depreciation 4,000, annual depreciation 3,000, 6,000 into 1/4, 1,500. Because it's a straight line method, so depreciation remains same for all the years. Annual depreciation is same. Total depreciation 8,500. Now after writing of this depreciation, you can find out the book value. 28,500 minus 3,000, this is the book value. Now I'm supposed to write down the entry for depreciation. Depreciation account debit to machinery account credit. So machinery account is credited with this depreciation 8,500. That is the total of this 4,000 plus 3,000 plus 1,500. Now this machine is sold. Wherein 20% loss on book value has occurred. This is the book value. 20% loss. So 28,000 into 20%, 5,600 is the loss. So here I am required to work out the loss. On sale 5,600. So the sales proceeds is 22,400. Machine is sold. 22,400 rupees are received. Amount received. Debit what comes in. So cash account debit or bank account debit. Bank account debit. Machinery goes out of ownership. Credit what goes out. So machinery account is to be credited with 22,400. Loss on sale of machinery is debited to profit and loss account. So profit and loss account debit to machinery account credit 5,600. This is how the sales entry will be recorded. And after that, this is the closing balance of machinery carried forward. Bank account debit to machinery account credit, being machinery sold and cash received 22,400. Loss 5,600, that is debited to profit and loss account. So profit and loss account debit to machinery account credit 5,600. There is an alternative way of writing the entry. Loss on sale of machinery account debit to machinery account credit, and the loss on sale is transferred to profit and loss account. Profit and loss account debit to loss on sale of machinery account credit 5,600. That's an optional way of writing the entry. Now after recording this entry, the sales is recorded. Annual depreciation is also recorded. Now I am required to find out the closing balance of machinery. So total of debit side 1,20,500 minus depreciation and the sales value and the loss on sale of machinery will be deducted. So closing balance works out to be 84,000. This 84,000 calculation confirms. This is how the closing balance is worked out. So this is the working note that I have prepared. As this is a straight line method, I have recorded annual depreciation for all the 3 machines. And on the basis of that annual depreciation, if in any year, if the proportionate depreciation is required to be provided for just like 6 months, it is calculated on the basis of 3 months. Here 3 months depreciation is calculated on the basis of annual depreciation, and that's why I have prepared a general summary of annual depreciation for all the 3 machines at the top of my note. So here I have tried to explain you this sum wherein I have prepared machinery account. For 3 years, I feel that you have followed all these things. Thanks to all of you.